Welcome to Markets Now. I'm Michelle Rook along with Darren Fry, Water Street Solutions. We are lower in cotton, livestock, and corn right now, a little bit higher in soybeans and mixed in the wheat as we move through the mid-session. Darren, I want to talk about soybeans. We're bouncing a little bit today, but honestly, both soybeans and meal have been consolidating now after we made those highs on Monday. So, are the tops in?
It's possible they are. I'm looking for more damage to the chart. I'd like to see a close under $15 in March beans, and obviously 490 in March meal is kind of that first step of key support. But beyond that, I think 477 will be key to the meal contract in the March position. We get under 477, yes, a top has been confirmed. Under 15 in beans, also a top has been confirmed there. But for now, we're still possibility of going higher still, but the markets are starting to feel a little heavy here with the Brazilian harvest picking up.
Yeah, I was going to say, we're getting some maybe Brazilian harvest pressure offsetting maybe some of the concerns that we had about a smaller crop in Argentina then, right?
Yeah, I think the Argentina crop is still, the jury's out on how small it really is. We are getting some more rain through Argentina, and so certainly the crop decline has been mitigated to some percentage of decline there. But we have a huge crop in Brazil. In fact, as I talk to more people down there, this crop might be above that 155 into the 158 area when it's all said and done, because the yields are just so high on a per hectare basis. And I think Argentina will have to import beans from them because they just don't have the beans they need for crushing.
And meanwhile, China's buying beans now from Brazil already, aren't they?
Yeah, they are. I mean, they've spotted in some stuff with us when they couldn't get their vessels loaded. There's quite a lineup down there. But yeah, I think, over the next 2 to 3 weeks, you're going to see a total shift over to Brazil as more of those beans are available for export.
Corn market also couldn't take out resistance areas on the upper level of the trading range that we've been in. Obviously, there's a kind of a tug of war going on in that market between kind of poor demand on an export front and some of these other crop concerns that we've had, maybe even in Argentina or the safrinha corn crop. Talk about where we're at and what's it going to take to move us out of that trading range.
Well, we have been in a trading range, and that 688, 689 area has been tough resistance. And, the closes last Friday were so strong in corn and wheat and soybeans and meal that it looked like it was inevitable. We're going to bust out and go to new highs, but that's not what happened early this week as we reversed. We did make a little bit of a punch higher, but then we reversed. And I think corn struggle really is the export demand, obviously way behind pace, but also the fact that some of that corn down in Argentina was planted so late that it really is going to fare better than the soybeans. That crop might only be 40 to 44, but it's not the 34 to 36 that are being tossed around for the bean crop. So when you look at what Brazil has exported in the last 4 months and Argentina's crop, maybe not as bad. Ukraine, will they stay open or not with this corridor? That's left to be seen. But I think corn is just really struggling with exports and the fact that there's 45-week highs in ethanol. We saw that on the EIA report. And really, there's no reason to push the grind higher. So ethanol might be backing off more and more here in subsequent reports from the USDA. So that's the headwinds for corn right now.
Yeah, and a lot of that export business we've lost to Brazil. Meanwhile, China really hasn't been in buying corn like they have been for us in the past, or last year at least.
Yeah, that's exactly right. I mean, I think a lot of the bulls want to see China come in. And, I think our relationship with them continues to be one that's pretty rough and deteriorating as we see more conflict arise in headlines. And as a result of that, I just don't see them buying corn from us. I mean, if they need it, they'll have to. But if they can get by, they'll stick with Brazil or Ukraine or another source because they'd rather do business elsewhere other than the U.S. right now.
Yeah. And now that they've struck this deal with Brazil to bring corn in, obviously that's going to not play well for the United States. So what about this wheat market? We had a nice run off of the lows here, but here again, we got up into some chart resistance. Where do we go now? What's it take to bust us through the top side of that range? Is it war premium, weather premium, what?
I think it's going to be war premium first and foremost. The weather is improving in Northern Africa, Middle East, plenty of moisture even in Europe. I think there's still a weather concern for our Western plains, our Southwestern plains specifically as we move into 23. I don't think that's enough to get the wheat market up through resistance at $8. But I do think that if we saw the corridor shut, wheat would explode to 9.25. But that is kind of that black swan event that the bulls are resting on. I think the bears are in charge of this market after it resisted in that 796 area. And now we look lower for new lows coming unless we see something abruptly change with the corridor.
Yeah. And it at this point looks like Putin is this saber rattling by him, basically saying, hey, we do not want to extend this deal or not?
Yeah, I think it's that. I mean, he's posturing for a better deal. He wants sanctions dropped. He still isn't happy with where the grain is going to Western nations. And I don't think anything will come to the point where they dissolve the agreement. I think it will get extended, but I do think there'll be some volatility ahead of knowing whether it gets extended or not. And that'll be because he's negotiating for a better deal for him.
Although it's not like we've been picking up export sales. I mean, weekly exports this morning were not that great.
No, they continue to be just lackluster. And I'd say soybeans have been a bright spot here over the last 4 or 5 weeks, but we're going to start to see that fade as well.
Sure.
But, corn needs to be doing way more than it's doing if we're going to hit these export targets or we have more reductions there from the USDA.
Would agree. So cotton down pretty hard here today. We've seen the dollar start to reverse back higher now the last couple of days. Is it economic concerns yet, or what is kind of keeping a lid on this cotton market?
Yeah, it's tough to really know exactly what is going on with cotton, but the charts I've been kind of looking up for a move up in that 102 area, but we're really at critical support. And if we get much cheaper and then have any exuberance to the downside, the highs are in and we're headed to the high 60s, low 70s right into spring. And I'm not saying that's going to happen. I mean, we still bounce. We haven't broken critical support, but we've reduced acres like 2.4 million acres. But I'm telling you, if we do end up giving way to the downside going to spring, that could mean less acres for cotton, obviously, and more acres for corn and beans. And I think we do need to pick up more corn and bean acres before we go to the field here in spring.
Yeah, it doesn't feel like the cotton market is really respecting that lower acreage estimate or surveys that have come out. Cattle market, let's end on that one. We're seeing a little bit of consolidation now after contract highs on Monday. There again, the cash trade's been kind of leading this thing. So if we get better cash this week, will we continue to see this market just kind of grind back up into these contract high areas or not?
Yeah, I think you will. Longer term, I'm a bear in cattle. And I said that 3 or 4 weeks ago on your program. And obviously, we're $3 or $4 higher than when I said that. I do think that it's possible cattle go a little bit higher. I know we're not into the tightest supply and just talking with people, talking with you before we went on air. But as a result, the next move of significance, I do believe, is down. That doesn't mean we can't go $3, $4, $5 higher first. But I do think that that's possible to move higher before we break this market. But I'm looking for the market to end up topping sometime here in February, March timeframe.
Thanks so much, Darren, for Water Street Solutions. That's Markets Now.